Sandeep Tandon joins us now, Quant Mutual Funds. Let's understand from him that where he feels the year is headed, where markets are headed, and where uh, Quant AMC has been actively shopping and they've been reducing stakes. Sandeep, your funds have done rather well for 2022. So let's start this interview with a smile on your face.
Yeah.
Your funds have done very well. Show a smile, sir.
Is good enough?
Yes, yes. Okay. What will you
Okay.
do differently to ensure that your funds remain in the top quartile? What are you planning to do as a strategy?
See, Nikunj, the way we have been handling money for last many years, we always talk about that we live in a very dynamic world, and hence your money management style also has to be equally dynamic. And that is something which we have demonstrated in last few years. And our agenda in 2023 is also to continue with that thesis because that gives us agility, that gives us ahead of the curve thinking, you can differentiate it from the masses. So that's the way we are trying to build, where we try to combine multidimensional research and which is working for us. So I think that thought process continues for 2023 also.
Okay. So what's your market call? Are we in for a year like 2022 where Nifty does nothing, individual stocks they outperform?
So Nikunj, the way we are looking at the market, yes, Nifty has been the biggest outperformer in 2022. Maybe Brazil, Argentina, and maybe India, three markets has done extremely well. So there's a high probability now that India can correct and consolidate on a relative basis. So well, let's talk about relative basis first. The high probability that Chinese market should do very well. Their data points are very constructive. They have been in a beaten or neglected zone for a while. So it's a possibility that India may underperform on relative basis. Okay, but we remain very constructive as a value, as a thesis. I see we have been talking for a while. I have been saying right from November 2021 that this decade belongs to value. And if you really look at even in last few days, also in last 1 year, value has actually outperformed. So it's a thesis which we are trying to build. It is the very early stages. So we are trying to identify stocks and sectors in this territory. Globally, I'm looking at, and I'm not looking at just India, but that thesis is working well for India as an emerging market. And if you talk about, let's say, talking about China, let's say everybody is very gung. We have been talking for nearly a month now that metal is the surprise element, which has surprising done quite well in last 1 month or so. I think if you have to ask me what will be the theme for 2023, I think metals would be one of the space where I look at extremely positive from the both from medium and longer term perspective, both in absolute and relative basis. PSU continues to be another important theme, which will you might see some amount of correction and consolidation, which we have seen very recently, but the larger thesis of value still remain intact. Another thesis which we like is the power sector. That's another opportunity is building. So it's a space which we have to identify the sector which are neglected, beaten down, and they are in the most neglected or untouchable zone, which I look at from the most of the money management perspective. These are the area where I think you will generate alpha in 2023 and maybe in this decade also.
Sandeep, hi, morning. And I see
Yeah.
in your active fund, the top holdings have a large quantum of infra in it. I can see Adani Ports, IRB Infra as well. It's
Yeah.
almost seeming to be a consensus trade now, pretty much all across.
So this, see, I tell you, one thing is that yes, consensus can be built, but it is not reflected in the action. If you really look at the holding structures of the most of the mutual fund, the FIs, you will not find these names in terms of proportionate. If you're talking about if their consensus trade, like banking is a consensus trade, then their holding should be significantly high, which is not the case. Which means, yes, we are talking about it, but in terms of action, it is not reflected. That's the reason we still believe these are the areas where opportunities will be much more as compared to what people are even perceiving at this point of time.
Quite interesting. So on dips, would you look to add more to the same names, Sandeep, or maybe add more names into the infra pool?
So the way we look at our portfolio, we don't buy the same stocks. It's not our philosophy. That we don't believe in a model portfolio where you keep on adding. So in a good times it becomes a very self-fulfilling process, and the difficult times becomes a self-destructive process. The way we look at if anybody looks allocate new money to us, we try to see what is the best opportunity from the current level for next 12 months, next 15 months, or next 3 years perspective. So that's the approach which we follow. So may or may not be necessary that I will be participating in all these names which we already have. I will like to look for new opportunities also. And I think there are plenty in the market.
Those new opportunities, Sandeep, because apart from financials, which is a consensus buy, it does look like teams like manufacturing, industrials, entire capex related theme is also making quite a bit of comeback strongly. Is that a space
Yeah.
which is one of those areas as well?
So I have been talking about manufacturing is a larger thesis which you are looking at from a current decade or half a century perspective. Anything revolving around manufacturing is this area, whether talk about capex or capital goods stock or industrials or infra names, even financials fits very well for that. So these are the names which we are looking at, but we have to now look at the stock specific opportunity like capital goods. Some of the names have become very expensive. Okay, some infra names also have done very well. So you have to keep on identifying the stocks which are in neglected, are getting at right price, qualify for value thesis, qualifies for under ownership category. Those are the areas which we think can generate alpha for us.
At holdings, Sandeep Tandon. These are public domain holdings. You manage a mutual fund, so your holdings have to be declared. They include two Adani names, Ambuja and Adani Port. They include an IRB and includes SBI. That's what we have. Now, some would argue and say that Adani stocks have seen a huge run up. Is there a margin of safety in them? SBI has gone from 200 rupees to almost 600 rupees. It's 3x from the recent low. Is there margin of safety in it? ITC, one of your top holdings, 50% higher in last 1 year. Is there margin of holding safety in it?
Nikunj, can you repeat? I could not hear you very clearly.
No, I'm saying that if I look at your top declared holdings,
Yeah.
there are two Adani names in it,
Correct.
Ambuja and Adani Port. What is your view on those names, given that they have been the toast of the town? For those who bought them, they work like a charm. For those who've not bought them, they call them sour grapes. But I'm curious to know that why do you have them in your portfolio?
So first of all, Nikunj, to be very candid with you, we are data-driven house, research-centric house. So we don't go by narrative, what market talks about. Okay, narrative can be anything. The data can be very different. So it's a data-driven house. So we still like we talk about Ambuja. So we bought Ambuja much before it became Adani Group company. We are holding it for a while now, and we have added. Okay, so we still believe if metal as a cycle will do very well. I think the materials overall, metal will not do in isolation without cement. And if you are bullish on infra as a space, then cement is by default is a byproduct of that. So I think we remain very constructive on the cement size. So that's the reason it is one of the large holding for us. And then we also like infra as a thesis, ports or airports or the entire logistics space, which is, so we are actually very bullish on that. Logistic is not only about one name, which you mentioned. We have a large portfolio on the logistics side. Okay, so we own 3, 4 names in the logistics space. So we remain very constructive. If you believe that India is going to grow, Indian economy is going to grow, I think then without logistic, we can't grow. Okay, the infrastructure is important. And within that, I think logistic is a very important category. So it's a very longer term core thesis which we have for these names. So logistics stocks which we have added, and I maybe given opportunity, I'll add more such names in our portfolio because this is the core portfolio strategy, and could be a decade opportunity the way we're looking at.
I just want to mark ICICI Bank for our viewers because it's completely going against the grain. Last 1 month, ICICI Bank is down from what 930 levels to about 870 levels. It's completely going against the market, so to speak. Today it's down 4 rupees, but the stock of late has gone completely against the market. Is the best of the move in PSU banks and corporate facing banks, Sandeep, is that behind us now?
So without getting into specific names, since we talked about ICICI Bank, see, I tell you, the way we look at it has been a very consensus trade. It's done very well in our portfolio. But just to share with us in public domain, we exited from ICICI Bank in September 2022 itself. So we don't own any of this name in our portfolio now. We felt it's not like we were negative on the stock. We felt this is the over ownership was there. The valuations was very stretched at that point in time. On relative basis, the opportunities in the other PSU or private sector was far superior. So we try to identify stocks when any stock started trading in the most admired category, and which was the case in ICICI Bank. that it was trading in the most admired category. And that's the time you have to prune down. That's the way the whole thesis of behavioral finance comes into play, that we have to identify the area where we have seen stock trading in the most admired category or the greed is extremely high. That's the level you prune down. And similarly, if you talk about September 2021, the banking stocks were actually traded in neglected zone. From September 2021 till now, I think we have seen a drastic change, and so is the case with ITC, which was trading in the neglected zone. So our thesis is purely on the behavioral finance as a data point, which we look at from a human side point of view. When we see these opportunities, if something has hit the admired territory, we believe that when you talk about admired territory, it's all about that outperformance phase is peaking out. Neither we are saying the price has peaked out, nor we are saying that earning is peaked out. What we are trying to say, the valuation multiple has peaked out. This is the way we look at from our what we call it perception indicator, that when it peaks out, it gives some confidence, look for better opportunities.
How is that any different than SBI? In fact, if you were to, track the history of SBI as well as ICICI Bank, the stocks have moved pretty much neck and neck.
So the way we are looking at, if you're looking at the more from the price performance, and when we look at the behavior performance is slightly different. So perception indicators for SBI has still not peaked out. Okay, yes, it has moved away from the most neglected zone, which was the case maybe a year back, but it is yet to reach the most admired category the way, let's say, ICICI Bank has reached. Okay, so these are the names, and PSU banks in general has not reached the most admired stages. They are still in the early, if not early stages, somewhere in between now. So that's the way I still believe in these names. The opportunity is still far better, okay, on both an absolute and relative basis.
So Sandeep, growth is taken a backseat. Value has made a reasonable comeback. Value is no longer a bombed out space, right? There was a time when NTPC was at the bottom of the barrel, Coal India was bottom of the barrel. These stocks have done rather well. Growth is no longer the top of the barrel. Most of the growth stocks are down 20, 30, 40, even 50%. So what is the trade now? Growth is not expensive and value is not cheap.
So I agree with you, but the way we look at, whether we are in the early stages of that cycle or we are in the peak stages. Okay. So yes, we are nowhere closer to the bottom of the cycle. Yes, the value has rallied a bit, but I don't think it has reached the most admired territory, which is required. So that's the reason we are saying it's a much bigger opportunity. Okay. And again, anything in the market does not move in a linear manner. So it's not like there will be phases, despite we are very constructive on value as a thesis, there will be phases where growth will bounce back significantly, and there will be periods when value will underperform growth. But if I have to look at a longer perspective, let's say decades view or multi-years view, I think this is still in the early stages. The value thesis, okay, is you are looking at data purely from the prices which has moved out. Let's say some of the value names has moved up 20% to 200% also. But the way we look at whether they have reached everybody's portfolio now, whether the over ownership is there now, everybody is satisfied. Yes, we have bought good quantities of value. We have not. Okay, we are still in a denial phase. People think it's anyway they have rallied, so it doesn't make sense to participate now. They're untouchable names. There are many such names where it is very untouchable for the investment community because they had bad experience in the past. Okay, so people are not going to participate, and this is the classic behavior data when its stocks remain in the untouchable zone despite they are showcasing good earnings momentum. People don't want to participate. I don't think anything has peaked out right now with the way, if you just ignore the price aspect, don't look at the price. When we look at the other multivariance model or the data points, when we look at from the market perspective on these names, I think they're in a very early stages. Okay, so I think the upside potential is far bigger. And the most important aspect, Nikunj, is that my downside is protected. So if I have to look at in 2023, well, I'm saying that 2023 will be more volatile than 2022 also, because we have been talking about that 2018 till 2023 will volatility expansion phase. In this phase, your traditional style or buy and hold approach will not work. With that background, we have to keep in mind, I have to protect my downside also in the turbulent phase. And these are the names where under ownership is very meaningful. The selling pressure will not emerge. If you look at the recent fall which we have seen in the month of from the first week of December till now, okay, the private sector banks corrected much more than the PSU banks, and when market recovered, they were the first to recover. Okay, so that's the way you look at the value as a thesis is recovering faster than the growth. Okay, growth is becoming now salon rally sort of strategy, and the value is still buy on dip. So I think the larger picture is just begin. I don't think we are anywhere close to a top sort of thing, unless we reach a stage where PSU Bank has a over ownership or value as a thesis has a owner ownership. You look at even Nifty, the component of Nifty are predominantly growth stocks. And this is where I see even Nifty can underperform in 2023 relative to values as an index or maybe small and mid also as an index. There's a high probability. That's the way data points are endorsing now.
Sandeep, so great to have you on the show, and I'm sure we'll speak again soon.
Yeah. Thank you. Thanks a lot.